If I asked you what this is made of, what would be your response? Now, as someone who is not an industry expert or someone who is not involved in the production of carbonated beverages, you will likely say that this is made of water, coloring, sugar, the plastic, and the tape. But if we had to talk to industry experts or those involved in the manufacturing of carbonated beverages, they'll tell you it is made of carbonated water, cola flavor, sugar, phosphoric acid, caramel, and any other ingredient that is involved in making this product. Now, as an accountant, we refer to those ingredients as materials. So, why they refer to it as ingredients, we refer to it as materials. Now, in producing this item, there are other items that go into it aside from the materials. We have labels, then we have the factory expenses incurred in producing this item. Now, the essence here is to know the cost of producing this item in the period of production. This will take us to accounting for a manufacturing business or manufacturing account. Now, a manufacturing account is also called production statement or goods manufactured statement. The manufacturing account is prepared basically to derive the cost of producing a particular product, the total cost involved in producing a particular product for a particular period. So if, for instance, you want to know the cost of producing a particular item, you use the manufacturing account to derive the total cost of producing the item. So we can define the manufacturing account as an account prepared or a statement prepared to derive the cost of production or the cost of manufactured product for a particular period. Now let's look at the terminologies involved. For number one, there we have direct materials. When you say direct materials, you mean materials directly utilized in producing the product for the period. For instance, you want to cook a soup. Any soup of your choice. It could be your local delicacies, a goosey soup, or bono, a wedu, a fori roll. Pick any one. Let's say a goosey soup, for instance. What are the materials required in preparing a goosey soup? You have the ugu, you have the blended egusi, you have palm oil, you have salt, you have seasoning, you have water, you have and of other things required. Now, when you put all those materials together, the cost of those materials is what we refer to as direct materials. The next one there is direct labor. So aside from the materials, you will need some individuals, to help in the process of the manufacturing. So the cost of getting those individuals, directly involved in manufacturing the product is what we call direct labor. So in cooking your soup, let's assume you are using your house help. Your house help is based on some salaries, or wages, depending on your arrangement, okay? And then, so any other labor involved in getting that soup done is the direct labor we're talking about. So in production concern, labors, utilized directly towards the manufacturing of the product is what we call direct labor. We can refer to it as direct wages or direct expenses. Here we have prime cost. Prime cost can also be referred to as total direct cost. So the total cost involved in what? In directly manufacturing the product, is what we call prime cost. So no indirect expense involved here, just direct cost. So what are the direct costs involved? We can talk about the materials and the direct expense or direct labor involved. So when you bring your materials together and you bring your other direct costs involved, okay, you're talking about the prime cost or direct cost. So all the costs involved in directly involved in producing the product or manufacturing the product is what we refer to as prime cost. Here we have factory overhead expense. We can refer to it as indirect expense. So all other expense incurred that are not directly involved in production is what we call factory overhead. So whatever expense that is incurred in maintaining or running the factory used for the production is what we call factory overhead. For instance, you spend money on paying rent for the factory, you spend money on cleaning the factory, you spend money on securing the factory, you spend money on repairing factory equipment. All those expenses are incurred on running the factory used for production, so we call factory overhead expense. But they are not directly involved in production. Rather, they are indirectly involved. So we refer to them as indirect expenses. The next one here is work in progress. When we say work in progress, we mean goods that are yet to be completely produced as at the period of reporting, or we can say unfinished products as at the period of reporting. So work in progress are the cost associated to goods that are yet to be completely produced. So we can have opening work in progress that represents goods yet to be completely produced at the beginning of the period or at the end of the previous period. And then we have closing work in progress, which represent the cost of goods yet to be produced at the end of the period. Technically, what it means is opening work in progress would have finished would have been finished or completely produced by the end of the period. Closing work in progress, we have to go to the next period. So basically, opening work in progress and closing work in progress are adjusted for in the manufacturing accounts to derive the cost of production. Now, how does a manufacturing account look like? I've already explained that the manufacturing account is to derive your cost of production. So what are the items you use in producing? You have a direct materials. You have a direct labor. So direct material used, note 1 here gives us details of the materials used. Direct labor here, note 2 gives us details of the materials used. So when you add note 1 and note 2, which is direct materials plus direct labor, you have your prime cost. This is it. So when you now get your prime cost, you take into consideration your factory overhead expenses. Note 3 will give us what make up your factory overhead expense. So this is it. Then we have your adjusted work in progress. This is it. So when you add your direct materials, your direct labor to get your prime cost, and then add your factory overhead expense and add your adjusted work in progress, you have your cost of production completed. So we have prime cost plus note 3 plus note 4. What is note 3? Factory overhead expense. What's note 4? Adjusted work in progress. When you add that together, you have your cost of production completed. So let's look at what make up the notes. So direct material here, we have note 1, direct materials. So basically, you want to produce, you need materials. So what do? You look at your store. Do you have some materials before you begin production? That is your opening raw materials. That's what you have here. Now, will the materials be enough? Will the materials be enough? If the materials will be enough, fine. If it's not enough, what do? You buy more. So we have purchase of raw materials. So you add it to your opening stock here. While buying your raw materials, it's possible for you to spend money to bring the materials to the store or to the factory. So we call it carriage inwards the raw material. You add it up. Out of the materials you purchase, you can return some back to the supplier. So you take it out, returns outward. That's why you're bracketing, you're deducting your returns outward, materials returned. Okay, so that's is now your raw materials available. That's your opening stock of raw materials plus your purchase of raw materials plus your carriage inward of raw materials minus return out of what? Raw materials. That's what you have here when you manipulate these 4 items. That's what you have here. So you now take out your closing stock of raw materials, okay, the one that you have not used. So that now gives us your what? Direct materials or materials that is actually what? Used for the period. That's what brings us to what? Our direct materials here. The next one is your direct labor. Note 2. What are the labors that you employ directly in the production of the what? Of the item. So we have direct wages and other direct expense. So once you're able to establish that this expense is directly involved in producing the product, so it's a direct labor. So when you put it together, you have your direct labor here. Okay, you add this together, you have your prime cost, your factory overhead. Look at it here. What are the factory rent, factory cleaning, factory repairs, factory security? Now we have depreciation of plant and machinery. I already explained what depreciation is. If you don't know what depreciation is, go to our depreciation class. Depreciation is the fall in the value of what? A fixed asset. So usually an asset is used over a period of time. Okay, so every year over that period of time, we take out a particular amount to reduce the cost of the asset. That we call depreciation, and that reduced cost is taken to what? Is taken as an expense. So in this case, because it's plant and machinery, because we believe that plant and machinery are used in the factory, that we're taking as part of what? Factory overhead expense, depreciation, and we have other factory expense. Once you establish that this is a factory expense, put it there, and then when you add everything, you have your factory overhead expense. And the next one is your adjusted work in progress. That's the function of your opening work in progress and your closing work in progress. So you have your opening work in progress here. Take out your closing work in progress. Whatever you have is your adjusted work in progress. When you add them together, you have your costs of production completed. Now this is an illustration on how to prepare the manufacturing account. So you can see from the following, you are to prepare a manufacturing account for Untitled Enterprise for the year ended at December 2018. So what are the question items? You can see purchase of raw materials, carriage inwards, factory rent, factory lighting, factory security, office salaries, repair of office van, bank overdraft, direct wages, other direct expense, returns outwards, raw materials, opening stock of raw materials, opening stock work in progress, factory repairs, factory cleaning, factory plant, closing stock of raw materials, closing stock of work in progress. So depreciate factory plant by 10%. That's the question. So let's prepare the manufacturing account. I already explained that your manufacturing account is a function of your what? Direct material, direct labor, factory overhead expense, and adjusted work in progress. So what's the direct material here? You can see 655,000, note 1. So what is note 1? Look at note 1 here. Direct material. So we have opening raw material. I already explained that. 230,000. It's in the question. We have opening stock of raw materials here. 230,000. We have purchase of raw materials. 540,000. Okay, if you purchase more, you add it to what you already have. So what's the raw materials here? You can see 540,000. The next one, you have carriage inwards. You spend money to bring the materials to the factory. So what's the carriage inwards there? You can see carriage inwards here, 135,000. Then we see returns outward of raw materials. This is the question. Returns outward of raw materials, 80,000. So you take that out. So when you have opening stock plus purchases plus carriage inward minus return outward, you have 825,000. This is your what? Raw materials available for use. When you take out your closing stock of 170,000, look at your closing stock of raw materials. Where is it? Here, 170,000 in the question. Minus it, you have 655,000. This is your direct materials or cost of raw materials what's used. That's what you have here. Okay, 655,000. Okay, so you can see the name of the business here, Untitled Enterprise. Okay, so the next one is direct labor. So what's the 2,000? What's the makeup? Direct labor note 2 here. We have direct wages. It's in the question. Direct wages here is what? 132,000. Other direct expenses 80,000. Is in the question. Other direct expense 80,000. So when you add it together, you have 212,000. That's what you have here. So when you have your when you add your direct labor to your direct material, you have your prime cost 867,000. Okay. The next one is factory overhead expense. What are the makeup of factory overhead expense? You can see factory overhead expense there. Factory rent 58,000. It's in the question. You can see factory rent 58,000. Factory lighting 25,000. It's in the question. Factory lighting 25,000. Factory security 125,000. Factory security 125,000. Factory repairs 55,000. Where's the factory repairs there? You can see it in the question. 55,000. Factory cleaning 45,000. Factory cleaning 45,000. Then we have depreciation of plants. They said we should depreciate plants by 10%. I already explained what depreciation is. Okay. So what's the factory plant here? It's 850,000. So if you apply 10% on 850, you have 85,000. That's what you have here. So when you add everything, you have 393,000. 393,000. Okay, so that's what we have here as factory overhead expense, 393,000. Then we have adjusted work in progress. Here, look at it. There's a work in progress note 4. We have opening stock of work in progress 95,000 is in the question. Here, closing stock of work in progress 47,000 is in the question. 47,000. So when you minus 47,000 from 95,000, you have 48,000. That's what you have here. So when you add your prime cost to your what? Factory overhead expense, and then to your what? Adjusted work in progress, you have 1,308,000. That is your cost of production completed, or cost of goods produced. So in this class, we've been able to explain how to prepare the manufacturing account. Okay, we established that the manufacturing account is a function of your direct materials, direct labor, okay, your factory overhead expense, and your adjusted work in progress. So the essence of the manufacturing account is to derive your what? Cost of production, or cost of goods what? Completed. Okay, in the class too, we were able to explain what work in progress meant, what direct material meant, what direct labor meant, and then we also explained what prime cost also meant. So here we've been able to prepare the manufacturing account with an illustration. So in the next class, we will be looking at trading after manufacturing. So join me in the next class on how to prepare the trading profit and loss account and the balance sheet after preparing the manufacturing account. If you have any question, reach me on 081365063356 or send me an email, jeremiah.dosu@gmail.com. You can as well drop questions in the comment section. I'll be there to reply you with the right answers. Like my Facebook page, jeremiah@geo.dosu-jad, okay, to get notifications on topical classes published from time to time. Thank you.